This is the AI News Flash for May 26th, 2 p.m. UTC. First up, Investors Business Daily reports a major shift in market sentiment as the so-called SaaSpocalypse fears that have weighed heavily on enterprise software stocks for weeks are now significantly subsiding, marking a decisive turning point as software sector enters a major rebound phase.
The iShares Expanded Tech Software Sector ETF, ticker IGV, is bouncing back strongly from recent heavy selling, dramatically narrowing year-to-date losses as institutional capital flows back into software, with data analytics giant Palantir Technologies notably outperforming the broader market, in a paradoxical move where the most heavily sold AI disruption casualties are now delivering the largest rebound returns.
Salesforce Agentforce, ServiceNow AI Control Tower, and Microsoft Copilot Studio are demonstrating real monetization traction with agentic AI integrations, fundamentally shifting the market narrative away from SaaS being disrupted by AI agents towards SaaS itself evolving into agentic AI-driven platforms, signaling a historic restructuring of institutional software sector allocation strategy, positioned as a critical milestone for the 2026 enterprise SaaS market. Second, Bloomberg exclusively reports that Wall Street institutional investors hunting for the next AI investment theme winners have arrived at an unexpected destination: the venerable Japanese seasoning maker Ajinomoto, signaling a historic expansion of the AI semiconductor investment thesis beyond chips themselves into the semiconductor manufacturing materials layer. Ajinomoto is globally renowned as the Japanese company that pioneered umami seasoning, but the firm also commands overwhelming dominance in a critical semiconductor manufacturing insulating material called Ajinomoto buildup film, known industry-wide as ABF, an indispensable advanced packaging material for high-density AI chip implementation integrated into the supply chains of every major AI chip maker globally, including NVIDIA, AMD, Broadcom, and Taiwan's TSMC, now being re-evaluated as a hidden core player in the AI ecosystem. Under the $725 billion combined 2026 AI infrastructure CapEx boom from the four hyperscalers, alongside semiconductor equipment maker ASML, memory chip leaders SK Hynix and Samsung Electronics, and HBM4-related stocks, Ajinomoto is rapidly emerging as a hidden champion in the semiconductor materials layer for institutional buying, joining Toto, Ibidin, and Shinko Electric Industries as core beneficiaries of the AI infrastructure. Second phase from Japanese materials sector, marking a pivotal milestone in the geographic and sector diversification of the 2026 AI investment thesis. Third, America's premier medical institution, Cleveland Clinic and women's healthcare AI diagnostics leader, Aspira Women's Health, officially announced a major expansion of their strategic collaboration, marking a decisive milestone for clinical implementation of AI-driven diagnostic technology in women's healthcare, a long underserved frontier area, signaling the beginning of true acceleration in the women's healthcare AI market. The core focus of the partnership is jointly developing and clinically applying high-precision AI diagnostic algorithms for women-specific conditions, particularly early-stage ovarian cancer detection, endometriosis, infertility, and menopause-related disorders, fusing Aspira's proprietary biomarker platform with Cleveland Clinic's massive clinical data assets, productizing machine learning blood test-based early detection technology, targeting revolutionary precision improvements in notoriously difficult-to-detect areas like ovarian cancer. With over 115 cumulative FDA-approved medical AI devices alongside Tempus AI Genomics Cancer Diagnostics, Roche's $1.05 billion PathAI acquisition, Anthropic's $400 million Coefficient Bio acquisition, and AstraZeneca's Okin partnership, this marks the long-awaited entry of frontier lab-caliber resources into the women's healthcare AI space, which has historically lagged due to male-centric data bias, positioning this as a historic milestone in the realization of the $250 billion AI drug discovery market projected for 2030. Fourth, PYMNTS.com exclusively reports that China's Alibaba Group payment subsidiary Alipay has officially debuted an AI wallet as the core feature of its new payments infrastructure, marking a decisive milestone for building the foundational layer of agentic commerce, where AI agents autonomously execute product search, price comparison, and payment completion on behalf of consumers, signaling China's full entry into the agentic AI payments market. The core capability of Alipay's AI wallet allows users to specify products or services in natural language, with AI agents automatically searching for optimal products, comparing prices, managing subscriptions, enforcing automated spending limits, and completing payments in a fully autonomous manner. leveraging Alipay's overwhelming payment infrastructure with over 1 billion monthly active users to construct an agentic commerce foundation, a strategic move competing against Visa's Trusted Agent Protocol, MasterCard's Agent Pay, and Stripe's payments protocol from the Western payment giants. This aligns with Tencent's WeChat Pay AI agent features, Huawei Ascend AI chip procurement, DeepSeek V4 open source, and Alibaba Cloud's 5-year, $100 billion AI infrastructure commitment, all part of China's autonomous AI ecosystem buildout. In stark contrast to the United States-led AI infrastructure trend backed by the $725 billion 2026 hyperscaler capex boom, positioning this as a critical milestone in the 2026 United States-China AI geopolitical landscape. Fifth, Quartz reports that former Wall Street investment banking managing director level financial professionals are now commanding daily rates of $25,000 to serve as AI prompt engineering training consultants for active financial institution staff, marking the historic formation of a new ultra-high value AI trainer professional labor market. Amid the broader Wall Street AI native transition, including JP Morgan Chase's deployment of LLMs across 200,000 employees, Citigroup's Gemini integration, HSBC's 20,000 employee reduction, alongside 1,800 AI hires, Morgan Stanley's 2,500 person cut, Commerzbank's 3,000 person reduction, and Deutsche Bank AI deployment, financial institutions are aggressively rolling out industry-specialized AI agents like Anthropic's Claude for Finance, Goldman Sachs's GSAI Assistant, and JP Morgan's LLM Suite, creating a structure where former bankers with deep AI prompt design expertise and financial AI workflow knowledge are commanding unprecedented compensation, aligning with the so-called token maxing trend where AI usage is treated as an internal competitive metric. In contrast to AI labor market disruption signals, including Goldman Sachs's projection that AI could affect 300 million jobs globally, with 44% automation risk in the legal profession, and Dallas Federal Reserve data showing a 13% employment decline for AI-exposed jobs among 22 to 25-year-olds. This represents the formation of new high-value AI-era professions, including AI trainers, forward-deployed engineers, AI governance specialists, shadow AI governance officers, and chief AI officers, marking a defining milestone in the fundamental transformation of the 2026 AI labor market. That's all for this AI news flash.